Yo, what is up, everyone? My name is Dom, and we're here to talk about unusual options activity. Alright, let's kick it off with a disclaimer. So, this video is for educational purposes only. The statements made in this program here are solely the opinion of the show and are not specific inducement to make an investment. One must perform their own due diligence and realize that all investments carry risk. There's no guarantee of profit. Alright, everyone. Today was another day. It was a pretty alright day today. So this first one's the Dow, the second one's the S&P, this next one is the NASDAQ, and as you can see here, we had a huge bounce back in the NASDAQ, so it was a good day for the tech trade. But you know, on a day where, you know, we've had about 3 consecutive days now where the S&P has been up about 1.5 to even 2.5%, I think. You know, at one point a few days ago it was up a lot and it started to come down, but still, you know, I did not do any buying today because I think tomorrow is going to be, we're going to have a little bit of a down day tomorrow. We're going to blow off a little bit of some steam, and the futures are pointing to a lower open. So, you know, I think it's a good thing that we did not do any buying today. I'm trying to be a little more cautious about conserving the capital that I built up on the way up, because you know there's quite a bit of uncertainty in this market, and I'm just trying to play it careful. You know, when everything was going crazy and everything was going up, it was easy to just see any unusual options activity and jump in and you make money. It's not really like that anymore. It's getting a little bit harder to make money in the market, so I'm being very selective with my trades. And some of these trades, you know, if it's a big update, I'm definitely waiting till the next day to get into the trade if it's lower, and if it's not lower, if it's up again, then I'm just completely passing on it because I want to conserve capital. I want to take some risk here because you know you got to take risk to make money, but I'm not trying to put on unnecessary risk in this stock environment right now. So just a little bit of a rant, I guess. So first one is Ford. These January 2022 20 calls. I like Ford. I think this is a turnaround story. Jim Farley is making money for the company, unlike the past CEO for Ford. So now, January 2022 20 call. As you can see here, Ford is trading at $13 a share. So this 20 call is pretty far out of the money. But like I always say, I don't mind going, you know, far out of the money. If we're going really far out, like for 2022 or something like that, if we're going really far out of the money, I want to give myself plenty of time for that trade to work. You get a good return on investment, but you never want to go too far out of the money. Now, if you come down here and check this out, it looks like there's some nice buying in these January 2022 20 strike calls. It looks like there possibly might be a sweep order here with someone coming in at 8.50 and 44 seconds and snapping these contracts up. So we're going to come here and check it out. Looks like we already have the filter on. So we're going to go down to that time at about 8:40, and as you can see here, someone's coming in and buying a significant amount of these contracts at about 8.50 and 44 seconds. I think if you add all these up, it's like, and it looks like it ends somewhere around here. If you add all these up, I think it's about 7,000 of these things. So that's about like a $500,000 order. I like someone who's putting down that kind of money on Ford. This thing was up when I first saw this trade, and I just kind of lost track of it. It looks like Ford kind of traded down towards the end of the day. But, you know, hopefully this one trades a little bit lower, and I might even consider putting on a stock position here and shorting some calls against it to create my own dividend stream. Because the implied volatility is, you know, it's above 50%. So, you know, if you short some of these calls against your stock, you can create a nice income besides the dividend. So let's take a look at the chart. Now, Ford has had a huge run here along with GM. I think both of these are, you know, they're cheap EV plays and they're turnaround stories here. You know, Ford has had a pretty nice run, pre-pandemic high of about 10, trade down to $3. And, you know, now it's up here at 13. You know, this is a stock that, you know, I wouldn't mind adding at, you know, all-time highs here, or not all-time highs, at, you know, 1 year high here. You know, Ford used to be, we'll take a look real quick here. Ford used to be about a $30 stock. You know, we might have some resistance coming up here at some of these previous highs here, you know, 14, 15, definitely major resistance at the 17, 18 level. People are looking to get their money back, you know, from 2013. It's been, you know, dead money for a while now. So I like Ford. All right, next one I want to bring up is APHA. Now this is a cannabis play. If you look here at these July 16th, 17 strike call, there's about 16,000 of these contracts traded today. Open interest of about 1,285. As you can see here, this thing does not trade a whole lot of options. I mean, this thing went crazy. This was kind of one of those Reddit stocks. You know, it's had some nice runs here. You know, it's traded, you know, from about 6 to 19, traded back down to 7 to 15. You know, I think that this is one of the few cannabis stocks that I do like, along with Canopy Growth. I think they're well positioned here. APHA is going to be merging with Tilray. You know, I don't really know much about that merger, but you know, I think Tilray is an alright company. And, you know, a lot of people really like that merger that's going to be happening. I don't know when it's going to be happening. I don't really know a whole lot about this company, so it might be time to do a little more research. But, you know, this thing got caught up in the Reddit trade here and traded up to about $33 here. Looks like we're kind of finding some consolidation around this 17 level. You know, once again, this thing was up huge today. I mean, it wasn't up huge. It was up $2, almost 13% up here. It looks like it's up more after hours. So I'm definitely not going to be chasing. You know, a lot of these people are buying calls and chasing this stuff. You know, I don't know. You know, that was fine to be doing, you know, 3-4 months ago, even 2 months ago, when everything just, you know, kept going up. But, you know, it's a little bit of a different story now that interest rates keep going higher. If you get some consolidation in interest rates, you know, as we saw today, we got some consolidation in interest rates. That's why all these, you know, high multiple, high, really aggressive growth stocks, you know, was up. CrowdStrike was up 10%. You know, Trade Desk was up nicely. You know, some of these higher multiple stocks, Peloton was up. You know, nothing against them, but you know, when tech stocks are way up and you know the cyclical trade is kind of getting a little hammered, I'm going to be buying cyclicals because I'm not going to be chasing technology. You know, when it's up, you know, however much, 10% or whatever. You know, I'm just trying to be a wiser investor here and you know take risks, but you know conserve the capital that I've built up over the long term here. So thanks to everyone who's been subscribing. I really appreciate it. You know, we're trying to keep it a little more consistent here. Definitely kind of staying away from more of those speculative plays. You know, there's a time and place for that. I'm trying to get into some household names. You know, I know APHA isn't, you know, really a household name, but you know, it's better than, you know, some of these other extremely speculative names that you know, we've brought up occasionally on this channel. So yeah, thanks to everyone who's been subscribing. I really appreciate it. Make sure to leave a comment down below if you got a question, and we'll see you in the next one.